Good afternoon, everybody. Sorry for the little delay there. Fortunately, I had a little bit of a problem, and I was teaching a crypto class this morning. So for my CIL students, we were actually trying to go through VPNs and trade international markets and international exchanges, DEXs using VPNs. And in order to get some things to work, I deleted all my cookies and all my cache. What a nightmare. All my accounts are screwed up, so sorry for the delay. How many minutes did I get late start? 3-minute late start. Oh, man. Big Eb added to the clock. So we are started now. Today will be a slightly different show. Yesterday, we looked at ChatGPT or GPT. Hope some of you enjoyed that one and learned something along the way. Had some fun playing with that. It is a rabbit hole. It is a pretty crazy place to dive into. I'm pretty amazed myself. So today, since I'm still having massive technical difficulties here, I will hopefully get this all fixed as we progress. But I think I have some of it done. Still can't figure it out, but we'll make it do. So let me start things off just so we know what the program is for today. This question came in from David and had multiple questions came in on specific cryptocurrencies. So I will do a show. I think what I'm gonna do is do once a month. I don't wanna overdo it, but do once a month where we will talk about the current update, really what's going on in the crypto world. What are some of the noteworthy things? What are some of the projects, the trajectories, and what's noteworthy out there? After we do that, probably 15, 20 minutes or so, then we will go down and look at what happened in the overall equity markets today. We'll talk about the CPI number, which came out, which was really good. And then, surprisingly, not one of you caught the egregious mistake that I made, I think, on yesterday's show, and maybe even one more this week. I made a pretty bad mistake, and I caught it, surprisingly, but none of you caught it. I will let you know what that one is a little bit later on. All right, let's dive into the January crypto update. So I think it goes without saying, most of you understand that right now it's still this crypto winter, this crypto funk, if you will. It's all about Sam Bankman-Fried. It's all about FTX, Alameda Research. And really, for the first part of this year, in my mind, the first half of this year, will be focused predominantly on regulations of exchanges and regulations of stablecoins. Those are your two main things that are going to be to focus on for this year. With those come a couple really important things. Let's focus on the regulation of exchanges. The reason that FTX imploded the way it did is because they commingled customer accounts with their own accounts, and there was no segregation whatsoever, and all of a sudden, they blew all their customer funds. Really kind of the same thing that happened on multiple different exchanges and lending protocols like Celsius, Voyager, etc. So really, the regulators are going to focus on that and say, you have to follow the same rules as a traditional securities exchange like E-Trade or Ameritrade. You cannot mix funds. Once that's done, then some confidence will probably come into this market knowing that some of those assets are protected should somebody like Coinbase or Kraken or Binance.us go under. So that's the first big piece, right? Let's set those rails for what these Wild West saloon type trading companies can do and ultimately give us a little more confidence. The second big piece that's going to happen, and I'll show you charts here in just a second, will be about stablecoins. Now, for many of you who have been following me for a while, specifically those of you in the CIL or the Digital Assets program at OTA, this whole world of digital assets and cryptocurrency will continue to slowly grow. If you want to get fast-paced growth, you have to have stablecoins. You have to have a digital equivalent of $1 so that it's not cumbersome for somebody like myself to sell my Bitcoin, then transfer it over to my normal bank account or have to go to cash and have this weird transfer. If I can stay in the digital ecosystem, it makes it faster and easier and more efficient for me to buy, sell, move, do whatever I need to do. It also helps companies grow and buy more into crypto. So without stablecoins, we won't get as quick of growth. Right now, stablecoins are, again, somewhat of a wild, wild west thing. We've got algorithmic stablecoins, we've got collateralized stablecoins, we've got non-collateralized stablecoins, all sorts of different products out there, and really no definitive answer on what is the right solution. For those that may not know, a stablecoin is something that is pegged to the dollar. And it's a very easy model if you ask me. What happens is you buy one of the Merlin stablecoins, which is going to be pegged to $1. And for every one of those you buy, I take $1 and I put it in the bank. And you're probably thinking, well, why would you do that, Merlin? Because you're lending me money. You're literally giving me money, and now I'm going to go put it in a bank, and I'm going to earn savings on it. Of course, I'm not going to keep it in the low yield 0.3% savings. I'll go out there and buy 1 month, 12 month, 2-year CDs, or maybe even buy government bonds and be earning 4 or maybe even 5%. So let's say you bought $100,000 worth of stablecoins, so you could go out and buy Bitcoin or Ethereum or do whatever you want on these networks. I'll take that money. I'm going to earn, let's say 4% overall on that money. And anytime you want it back, here you go. That's 100% backed by physical assets, dollars and government-backed bonds, which will probably be what happens. Once those two things are in place, then crypto will really start to soar. Now, part of the excitement for me really is the big picture. So here is Bitcoin. The good news is for Bitcoin, we have seen a relatively recent breakout. Oops. Oh, great. Oh. Now I have to go through all this garbage. Sorry. I'm going to have to just keep refresh. For some reason, when I redid my set, when I deleted all my cookies, all of my stuff went away. So now I'm stuck on these advertisement pieces. Hopefully we can make it through the show without too much problem. The good news for like Bitcoin, for example, if you look at the price chart, we are breaking out of some more recent highs right around 18,352, which is great. We've had a 15, almost 16% move since those lows we saw just a couple of weeks ago. That's great, and you're seeing obviously interest come back in. This is the first time in months that we have seen the futures are priced above the spot price. That's also a very positive sign going forward. Now, the big picture here, and I'm not going to go too much into this because it's kind of for my students, is that 4-year cycle. And here it is mapped out. Let's go to a monthly here so you can see the whole picture. So this is my prognosis of what's going to happen over the next 4 years with Bitcoin. You can see the first year has been nothing but aggressive sell-off. You're going to have a slow traverse for the next year or year and a half. We'll probably get to 23, 24,000, fine. But we're really not going to get the huge move till that regulation is out of the way. Once that happens, then my hypothesis is we're going to see a monster move up, just like we have historically in Bitcoin. You notice we did it here. We had this monster sell-off, or huge market rally, massive sell-off, and then rip to the upside. That is standard scale, not logarithmic. I'll put it on there for Tom. But you can see we typically have these huge impulse moves, pullbacks, and then monster rallies. Huge impulse move, big pullback, monster rally. And same thing here, big pullback, monster rally. So the forecast really does mimic the historical movements of Bitcoin over time. And of course, there's things like halving and other aspects to it as well. But that is kind of my forecast for the future for Bitcoin. I think it's going to be sideways choppy for the next year, maybe year and a half, and then we'll start to see really good growth. And I think that a lot of that growth is going to come off the heels of innovation, regulation, right? Three. Innovation, regulation, and adoption. We're already starting to see a little bit more adoption. There are new technologies being built right now, like Strike technologies, which allow you to use your cryptocurrency and pay at a variety of different merchants in dollars. You just swipe your card and it'll take from your account, convert your Bitcoin, your Ethereum, Litecoin into the native currency of whichever the store would like to accept. That is kind of a newer technology that's gaining some traction, and hopefully it will continue to grow. And pretty soon I'll have 2 cards in my wallet. I'll have my Visa card and I'll have my crypto card, and I'll probably start using my crypto card much more, which will facilitate adoption, thus getting to that big giant spike that you see over here on the right hand side of my screen. So that's the good news, at least is the long-term perspective. Certainly I expect more choppiness over the short term. Now, normally when you have a big parabolic move like you have here in Bitcoin over the past couple weeks, expect there to be a pullback. Hey, Ricardo, I think you'll see, maybe a little more movement, but it does feel like it's poised for a pullback at this time. The key for Bitcoin is going to be it can't break these lows. It can't get down below that, 16,000. If it stays up at 18, drops to 17, fine. But we got to see that strength remain there. I'll just put this line over here because it actually should connect to this bottom. See that nice little momentum to the upside. Now, as far as being a crypto market update, well, there are some things out there that are rather noteworthy, and we'll look at some charts here of some of the major ones. First and foremost would be something like Avalanche. Recently, Avalanche just made an announcement, which is why you saw it jump almost 25% yesterday, that it's going to be it's being utilized at Amazon Web Services. So that you now have servers for Avalanche sitting on Amazon Web Services. Now, what this does is it grows adoption very quickly. You'll start to see more and more people using Avalanche. Amazon has already said they're going to be using some of that technology. So as we look out at the landscape of layer 1 technologies, again, for those who might be new, A layer 1 technology is simply the base layer blockchain that's responsible for recording all the transactions and keeping the network secure. That's it. Everything else is built on top of those. And your main layer 1s are going to be Ethereum, Avalanche, Solana, Cardano, EOS, Cosmos. List goes on. I could run through more off the top of my head. I feel like I'm missing one. Polkadot, another one. So each of these is trying to create its own ecosystem, its own world of exchanges and swap sites and security protocols. You name it. There's all types of different projects on top of those. To give you an example, I don't know why this browser is switched like this. I'm browsing as a guest. Okay, I won't change anything until after the show. Let's just type in. Do you guys have a favorite network out there? I know Ethereum. Let's go look at Avalanche since it's let's go Avalanche Ecosystem. And you'll see all kinds of different graphics here. 1 second as I bring it up for you. Well, I'm just making sure we gotta get past the X-rated stuff before I see. So here we go. There you go. Here's a good example. So this is Avalanche, and you can see they have all of these different NFT marketplaces down here. You have different wallets that you can use on Avalanche. You have interoperability, so you can go to different marketplaces and exchanges. Here you've got some gaming aspects, decentralized finance over here. You've got stablecoins, browsers, antivirus, retail, custody, all of this, oracles. I mean, these are all different market all different market segments that are all built on Avalanche. And I could swap out this Avalanche or AVAX logo in the middle and replace that with, again, Cardano, Solana, Algorand, Polkadot, Cosmos, and they're all going to have their own ecosystem. The question for you and I, as someone who's looking out at this landscape saying, which one's going to be Amazon in 10 years? I don't know. And that's kind of the focus of the CIL, the Crypto Investor Live program, is saying, let's look out there and analyze these different projects and see which ones have merit and which ones do not. There's a lot of stuff out there that's garbage, right? That is absolutely junk. You still beat my employee to work? Wow, you got some lazy employees there, Chris. There's a lot of them out there that I said that are just junk. And we have to filter out through those to figure out exactly what they are. I think I may have joked around with you guys yesterday talking about Hex, right? Hex program or Hex protocol. It's the ultimate scam, right? This is a total Ponzi scheme, con artist, cryptocurrency. And there's many of them out there. Unfortunately, we have to figure out which ones are good and which ones are bad. So let me go through. I had a couple other listener questions here. Hold on a second. This one came in, and I can't remember the name of the individual. You were probably here today, but I didn't scroll back through to see who it was. This was written in the chat yesterday asking, your thoughts on the Anchor token or Anchor project, ANKR. So one of the things I've mentioned with you, I think I have so many different classes and things I'm teaching, I may be losing track. But one thing I love about the crypto asset world and digital asset world is disruptors. I'm looking for something that's going to replace a current financial model. So for example, I've used LivePeer as a representation of this. LivePeer is a decentralized streaming service. Well, the centralized model is Amazon Web Services, which is making billions and billions of dollars every year for Amazon. It's their breadwinner, right? Huge money in streaming services and Amazon Web Services. So what they've done is they've not really created a monopoly, but they've built one of the biggest, most dominant positions, and it's centralized. So at any moment, Amazon can say, get off our servers, we don't want to stream that, go away, block your account, freeze it, whatever. LivePeer attempts to do the same thing, but using a decentralized computing network, using everyone's spare computing resources when you're not using it, and stream through that. Why not? Now, there's a lot of these sharing type of protocols. You've got Gollum was the original one. You have Render Token, which allows people to use your personal computer graphics cards. You have Anchor, ANKR, which is, again, sharing computer resources. Essentially, it's like think of the sharing community. We all have a computer at home. Some of us might have a really badass one that's super powerful. You know what? That has value to you. You could sign up for Gollum or Render or LivePeer or Anchor Protocol, which are all relatively the same. Those are all projects that say, let me share my computer with you, and you're going to pay me a small amount of money for it, and that may save you. You may have a big project, a graphics project you have to render out, and why spend a ton of money to do it when you can, instead of buying a computer, just use mine and its capabilities. So that's kind of the future here. And to the gentleman that asked me my thoughts on Anchor, I like it. I'm a fan. I'm a fan of any technology that kind of represents that, moving away from the centralized entity and going decentralized. So I don't have Anchor on here. Let me add Anchor to the list. First off, I need to go find out which exchange is the best. So let's go to CoinMarketCap. Go to CoinMarketCap here. Gosh, I hate when I don't have all my presets. And we'll just type in ANKR. So there's your Anchor. We can scroll up here a little bit, go to markets, and now it will tell you what is the most liquid market, and that's going to be ANKR USDT. So it's Anchor versus the Tether currency pair, and it's going to be listed on Binance. Okay, great. So I will go out to my TradingView, and I'm going to add in ANKR, and then I'm looking for against Tether at Binance. So that's the most liquid marketplace. That's the one I want to look at. All right. So I don't have my watch list broken down. Cameron, who teaches the Crypto Investor Live program with me, has a way better watch list. His is fragmented by market grouping. But, you know, here's your Anchor protocol. If I look at the price chart, it's god-awful. I mean, we were up at, 22 cents back in 2021, and here we are now at 2 cents, so down 90%. Doesn't look great, you know, and ultimately, could this go to zero? Yes. I think that if you're looking at something like Anchor Protocol, you need to look at all their competition and say, okay, who is leading the space? Who's getting more adoption? And, you know, there's things we can do. Well, before I dive into that, who's competing with Anchor? Well, there's Anchor Protocol. You have Render, which is another one which really been flatlined. And this thing was up at about $9 and is currently trading at 45, so over 90% drop. You look at, let's see. I don't know if I have Gollum on here. I don't have Gollum on there. You have LivePeer. So here's LivePeer, which also looks, I mean, everything looks really bad right now, but you can see over the past few weeks, it's starting to show a little bit of strength. So, you know, if it was up to me, I would actually go out and line these four up and some others. There are a couple other competitors, but they're all very, very small. And I would say which one has the greatest legs, right? Which one's got the best potential? Because Render in this space is specifically for a small niche market. It's for sharing your computers to render heavy graphics files, video. That's a niche market in my opinion. If you look at LivePeer, it's more streaming, right? Streaming services, which again is a niche market, but I think it's way bigger than a 3D video rendering system, right? So if I have renders, it's very unique idea, but not mass adoption. If I look at LivePeer, I think it has a much greater prospect for adoption on a bigger scale because a lot of us, everybody's streaming. I mean, you're all streaming this right now. Even people who are listening to the podcast, whether you downloaded it to your computer or streamed it, you're using someone's service, and generally those costs are rather expensive. But if we move away to a model where it's a shared community and we, as a global community, are all sharing our computer power, then we can give the middle finger to Amazon Web Services and says, we don't need your streaming service. And the cost drop significantly because all that extra cost disappears, right? It goes back to base cost of the equipment and the users share a small little percentage of the profits. So to me, that's where I would be looking. The one that competes more directly with Anchor is Gollum. And Gollum is a shared computing service just like Anchor. And I have been using that one, or I'm not using. I bought Gollum a long time ago. Don't know, I don't even have it on my watch list. It's actually one that I own. Let's go like I just did and go to Gollum. And just so we can see where it's at. Is it EM? I think it's, yeah, Gollum, GLM. And let's find out where it's most actively traded on. And it's most actively traded on Binance as well, but very low volume. Very, very low. I mean, this thing is barely trading. So this is not a good sign for anybody looking at Gollum. But it's trading the most against the Binance USD. So we'll go look at Gollum. We'll go GLM, and then it's going to be BUSD here. There it is. Add that to the list. So Gollum and Anchor, I'll put side by side so we can see what the price charts of them have looked like. But they're pretty much the same thing. So there's Gollum, right? So this is Gollum's price chart going back into April. More ads. Oh, goodness gracious. 1 second. Let me reload this here. I may have to step up and actually pay for this service. Imagine me actually paying for a service. That's just crazy. Let's go down here. And we'll go to... now everything moved on me. Here's Gollum. right? Gollum back into August of last year, nothing but a major downtrend, and Anchor looks pretty much the same. I think they're all kind of doing that same basic scale. So, if you're looking at it, personally, I would probably say I would dig in. I would maybe buy a little bit of each. And as they start to get better and one becomes more dominant, then I would start to put more money into that one. At this point, I don't see a lot of people using shared computing. Someone asked in here, do you think it's going to compete with Netflix? At some point, it could. That's so far away, Robert. Like, honestly, that's a pipe dream at this point. Now you're just like maybe streaming your concert for your band or your church feed as opposed to going through AWS. Let's save a lot of money by going through a crowd computing type of marketplace, if you will. But could it at some point? Yeah, I think it could absolutely compete with Netflix at some point. There are other companies out there that are talking about replacing Netflix with a decentralized marketplace of their own that's specifically a Netflix but decentralized. So I guess you might have to use CliK. Oh, maybe, Glenn, maybe. Let's see. Do you spend a lot of time talking about disruptive technologies in your CIO program with OTA? It's not like I say specifically that we have X amount of time dedicated to disruptive technologies. Each week in there, Cameron and I will go over, here's some of the big headlines and why it's important to us. Here's the progress that's going on in the crypto world. And then depending on the day, we'll pick a project at random. A lot of times I just pick a number out of a hat and say, let's analyze this one as far as rankings. And we'll look at them. And sometimes you get projects that are redundant and stupid. Sometimes you get scams. You're like total, like Hex. Stumbled on that one. Someone asked for it. Total scam. And then there's others where you go, this one's interesting. I'll put that on my radar or maybe even buy a little bit of it right now. For example, the ones I've bought this year last year that I thought were really interesting. I bought some Live Peer, obviously. I bought some VeChain, which I think VeChain is an interesting one from a supply chain data management perspective. And then Engine, which is kind of an NFT marketplace, creating all sorts of interesting technologies to boost the NFT space. Unfortunately, Engine has really done nothing. Let me see if I can show you that one. It's really just cratered. I mean, it's been going down, 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 and I haven't seen any real development. I did the research. It looks interesting to me, and I took a risk. I'm down pretty good on this one. I would say I'm probably down about 40-50% since I purchased it. But, that's everything right now. At some point, maybe this starts to stabilize and move back to the upside. Another one that I was really big on in 2017 was EOS. Now, luckily, I bought... Oh, you got to be kidding me. Luckily, I bought a lot of this back in 2017. Oh, sorry for the inconvenience with the charts here today. I'll have to fix that after the show. But I bought a lot of EOS in 2017. Here it is. And, the main reason is they do so many transactions. EOS at one point was doing 50,000 transactions per second. They were one of the most active networks out there. And now they just kind of fizzled out. So, lucky for me, my average price is actually lower than where we are today. Now, I should have gotten out when we were up at 22, 23 bucks, but it is what it is. Can't say shoulda, coulda, woulda in this one. We'll leave it at that. So, Ganesh says, when you refer to the future of Bitcoin or any of the cryptocurrency, are we looking at the currency itself or the technology behind the blockchain or both? How will stablecoin be by the government change the fate of Bitcoin? Okay, so a couple of really good questions there. So when I'm talking about the future of cryptocurrency, I'm talking about the industry as a whole. Blockchain, without question, will be here forever. That's not going away. It's a much faster, more stable, more secure way of keeping a database record. So blockchain is here to stay. The question becomes, do things like Bitcoin and having an alternative payment system to the US dollar, are those things here to stay? Now, in my mind, if I'm the US government, or any government for that matter, I'm going to look at cryptocurrencies as an evil. Because if I have power over the currency of a country, let's say I'm the US government and I have power over the US dollar, then I have absolute power. Because I can manipulate that currency to do my bidding, as we have seen the government do with the Federal Reserve and interest rates and US dollar printing, right? The reason we have super high inflation isn't because of a specific president. It's because the Fed printed trillions and trillions and trillions of dollars in a 2-year window of time. Now we're removing those 2 trillion, or not 2 trillion, it was, we went from 15 trillion. We're removing some of that $15 trillion that was created, and that's now having an impact on the market. So if you have control over the dollar, you have absolute power. The fear has been that something like Bitcoin could become the reserve currency of the world. It's a pipe dream, but it could potentially happen down the road. The good news for us that are crypto enthusiasts is that if we get regulations on stablecoins, those stablecoins will further bolster the US dollar as the reserve currency. And the way they are going to do that is, the fear was you're going to buy a stablecoin and no longer buy dollars. So that would hurt the US dollar. However, if you make the rule in the United States that if a stablecoin has to be backed by, let's say, for every dollar that goes into it, maybe 15% has to stay in cash, and the other 85% can be in government bonds. So now you're a win-win. Let's do 20-80, okay? 20% cash, 80% bonds. And the reason you do that is, if there's a run on that stablecoin, and everyone says, crap, I want my stablecoin out right now, you've got 20% of the value there that you can use for redemptions. And in a worst case scenario, if there's a super run on the bank like there was on UST last year, you can start to sell some of your bond portfolio. And maybe it's 50-50, I don't know what the ratio is. But if the government forces stablecoins to abide by that, they're buying physical US dollars, which further bolsters the US reserve currency status. And even better, they're buying government bonds. They're buying the debt. So this is a win-win for governments. What they have to do is say, you cannot have an algorithmic stablecoin. You can't have a cryptocurrency collateralized stablecoin. It has to be physical dollars and government bonds. Anything other than that, you can't trade on a US exchange. Initially, I think that that's going to scare people and make the crypto markets drop a little bit. In the long term, I think it's awesome, because now you'll get the stamp of approval from regulators, governments, and banks saying, yes, you can hold stablecoins because they're backed and audited by dollars and by government bonds. And out of that comes something very powerful. Most of us have the comfort of knowing that when we have our money sitting in a bank, we have FDIC protection, right? I'm insured up to $250,000. But if the argument comes in that a stablecoin is simply a representation of a US dollar, at what point do we get regulators going, hey, that should have FDIC protection? Now, when that happens, none of us are going to keep our money in a bank account. I'm going to pull everything out, go to a controlled and regulated exchange, and I will be in stable coins, and I will be using those stable coins to get myself a higher rate of interest than the bank can generate. To me, that's a huge step forward if we get FDIC protection. The second part of that equation goes into SIPC insurance, right? So how do I get the security side if we once and finally decide that these are actually securities? There's a big debate there. But now I get protection on my investments like Ethereum or Litecoin or Algorand, right? If now all of a sudden those have some SIPC protection from the government, I think the sky's the limit for crypto and digital assets. But we're a long way from that. I think that's the discussion that you're going to start to hear going forward will be more about, hey, let's protect consumers. And if a stablecoin is actually backed by dollars and bonds, there's no reason why we shouldn't give that some protection as long as it's audited. And that could be a huge catalyst for our markets going forward. So there you go, Scott. I don't know if I answered your question directly. I know, they're not securities, Jim. Some, and that's the big thing. We don't know. We just don't. Are they commodities or are they securities? Right? If they're a security, if you're going to say it's a security, then that gets SIPC protection. Should get it automatically. If you're saying it's a security, then I think it's what? Security Investor Protection Company. I think that's what SIPC stands for. Great. All right, label a security. In Italian, they go, ma chi se ne frega? Who's going to care? Just label it something and allow me to get that protection on it. I think if we did have that protection, I think some people would feel much more comfortable investing in cryptocurrencies that are securities. All right. If you guys have other questions on crypto, send those on in. I wanted to get through Avalanche. That was a key one. There's some new stuff out there. And again, one thing I would really encourage all of you to pay attention to is the hype train. Don't get caught up in the hype of some of these things, like Bonk. Bonk token just came out recently, and it's a joke of a joke of a joke of a joke. It is literally like a 7th generation meme stock coin or meme coin that's an absolute joke and should be discarded into the trash. I will dabble with them every now and again, but the only reason is with gambling money. And I'm looking to capitalize on a short-term move. You got to know a lot of these things are absolute scams, pump and dumps that are created in a matter of seconds and by some 14-year-old kid in the garage. So anyway, there you go. Let's see. So there was that one. I had another crypto question here real quick. Let me get to that one. All right. So this is a good question that came in from Mihai. Merlin, are there certain crypto projects related to AI would you believe that these can be the catalyst of a new bull run, considering what's going on with ChatGPT and the potential interest of Microsoft to invest $10 billion in the business? So there are some projects out there that are using AI technologies, but they're I think that they're way too early, right? Remember, the whole premise of cryptocurrencies was to stick it to the man and say, we don't want centralized. We don't want anybody to tell us what we can or cannot do. We want to have autonomy and we want decentralization. With AI, I don't know if that really matters yet, right? I don't think we've sussed out how effective AI can be, what its real-world applications are. We're still discovering, and certainly there are some great applications coming out, but what's the broader implications of AI? There was one that we reviewed as a class a couple weeks ago, which allows you to use artificial intelligence to create what they call agents. And you can program this agent to do all sorts of different activities, but I just really didn't see how useful that was today. Maybe a few years down the road, I think that we will see a bit more happening with AI in the crypto world. But right now, you got to start to really think about finance stuff. What's it going to do to the payment networks, right? How can we speed up and make payments more transparent and efficient? Cross-border payments and remittances, that needs to be solved with crypto. Then, how do we use things like Ethereum or Solana or Cosmos and build out competition to traditional real-world businesses using digital assets? And I think that's the evolution that we're in right now. At some point, Mihai, I do think that AI will step in there. But just not yet. I mean, this ChatGPT thing is absolutely blowing up, and rightfully so. It's pretty damn cool, but not yet in the digital asset space. Let's see. Is there a term for someone that doesn't hodl but trades crypto instead? I want a cool term. Yeah, you don't have a cool term. You're just a trader. Nah, I like the hodler, the hodl term. I like that one. That's a fun one that came many moons ago. It was actually started by somebody who messaged, I think emailed a response to somebody when they were drunk, and instead of saying hold, they typed in hodl, and everybody made fun of them, and it's stuck ever since. That's the one school of thought. The other school of thought is that just stands for hold on for dear life, which was very appropriate in that crypto world. Let's see. What will banks do if everyone decides to hold cash in stablecoins? Well, and that's the other side of this, Robert. It's a great question. This obviously is not going to happen right now, but you already have over 100 central banks exploring central bank digital currencies, or CBDCs. And there's also hybrid CBDCs, which are coming to market here real soon. Ultimately, what will probably happen is I don't really see the Fed creating their own stablecoin. I think that might be too much for them, but they may partner up and utilize someone else's network and incorporate that into their protocol. So I think the Fed is going to embrace digital assets, and these banks at some point are going to have to accommodate for them. My guess is in the near future, you will be able to store your digital assets at your Chase, your Wells Fargo, your Bank of America. I foresee a future where the rules are in place. They're very clearly written about exchanges, about stablecoins, and we now know all the paths that crypto can go down. Once those are in place, then you have clear-cut rules for banks. And it would not surprise me at all to see your bank be the custodian for you, should you want to, of your digital assets and stablecoins. So I think that it's going to be a tough fight, because obviously the banks have kind of a monopoly on what they do. They will lose some business to people like me who I don't trust banks anyway. I think they're a necessary evil, but I'd rather get rid of them. It's tough. If you believe that government is so heavy-handed that they're going to thwart all the innovation that's coming down the pipeline with regards to digital assets and crypto, then okay, then the banks won't get involved. I think that the banks are in a situation now where they're like, adapt. Let's adapt to it. Let's embrace it. And we're not going to fight it because it's just inevitable. Let's do more with digital assets. So I think you'll start to see more banks become digital banks where you can store assets out. Okay, any other questions on the crypto world? I think I got the two that came in from Mihai. Real quick, let me see. I do have some other ones I want to get to, but I got the anchor question out of the way. Other than that, personally, I don't see anything in that crypto space right now that just has been screaming at me or warrants much more of a discussion. We talked a lot about some privacy coins today in the Crypto Investor Live program. I think those are going to be challenged here in the near future, things like Monero and Zcash, just because privacy concerns. We all have privacy concerns, But the government doesn't want money to remain private. They want to be able to see where all this stuff is going. Other than that, I'm just running through the list here to see if there's anything that I find very interesting. I mean, I could talk at length on every single one of these ones, but I'll save that for the CIL and other programs. So there you go. That's my quick little rundown of the update for cryptocurrency. You do have some legislation being passed, not only in the U.S., but internationally. You also have the Bank of International Settlements has been saying that the banks and the Federal Reserve, so you guys all know the Bank of International Settlements is the Federal Reserve of Federal Reserves, right? It's the one that makes all the rules, essentially, for Federal Reserves. The Bank of International Settlements recently released a document that outlines what central banks can do. Can central banks store digital assets on their balance sheet? And the answer is yes. By 2025, it should be fully implemented where banks can hold Bitcoin, Ethereum, and Ripple, and even, Bonk coin or whatever stupid shit coins they want to hold with certain rules. And there is a breakdown. There's a category 1, category 2 that outlines exactly what those holdings can be, how much there can be in those specific positions. So for me, that's very encouraging. That's writing on the wall that says the future is saying, yes, central banks, you can hold Bitcoin on your balance sheet, but here are the parameters that you have to follow to not put yourself at too much risk. So that is a huge piece as well. That's a more recent document that came out. But again, that's the current status. We're still struggling with the FTX garbage, and hopefully it gets better. But right now, that's where we're at. And man, I was not planning on going that long on that segment. Let me real quickly run through our top markets here. Hopefully this doesn't mess with me because apparently I'm logged in as a guest, and if I change it, it's going to screw everything up. As far as today goes, not the best day. We got a bit of positive news out there from the broader indexes, 0.61% for the Dow, but again, right up into supply, right? It's right at this area where I would kind of expect it to have some difficulty. 34,319 is the Dow. Russell 2000 was 1.65. Again, it's right at supply as well, hitting its head almost on that 1900 level, closing at 1885. So we're very, very close. If you're expecting a little bit of a reversal, would not surprise me to see that maybe tiptoe and reverse tomorrow. Of course, I have some other news for tomorrow, which I'll get to in just a second. You had the NASDAQ was only up 0.5%, even though it was down much more earlier. It really recovered there near the end. You had 11,534 close, or 0.5% gain. Moving up our list. Oh, that's why it's screwed up on me. Let's just bring up our list. S&P was your worst performer, 0.34. But remember what I talked about? We talked about this trend line right here. And notice today, it hit it. I mean, the high for the day was, let me go right to the high of the day, 4,021. You guys might remember yesterday I was laughing and saying 4,020. I'm like, ooh, 420, that's kind of funny. Well, we hit that one today. So be cautious tomorrow for a potential downside move here in these markets. If I'm looking at this pattern here on the S&P 500, thinking that we're consolidating, right, having some compression of price, well, we've hit that upper area, or at least the trend line, where it's most likely to come back down, and then at some point, it's going to break out of this triangle. I'm going to just extend these out here. Leave it right there. At some point, it's going to break out of this triangle and have a really strong move up. Could that happen tomorrow? Absolutely. I mean, you guys all know what's on the plate for tomorrow. It could be a monster day on Friday. That was S&P. We did NASDAQ Dow. Here's gold up 1.06%. I'm still bullish. Love the move today. I think 2,000 is absolutely on the plate. Could see it relatively quick here. Momentum is really ripping. I'm just so bummed that I got my shares called away from me, but that's the perils of trading options. Crude oil, 1.27% gain today. Even though it's had a really impressive 6-day run, it still hasn't done anything noteworthy, right? I think if you all look at this, you guys, if we look here at this picture and go, man, what a huge run it's had. Yeah, but it hasn't really done anything. It's in 2 days. Let me get some percentage declines here. And this is all rough. I don't have it on snap mode. In 2 days, crude oil fell 11%. And here we are days later. We'll go to where we closed out today. In 5 days, it's up 8.17. So it sounds amazing, 8.17%, but we're still not back to those highs we were at right before this sold off in January. So it looks good, but it hasn't made any new highs. I'm still optimistic. I'm still in XLE. It's been a nice rally for the past few days, but still nothing that I'm like, oh, here we go, right? When I look at Bitcoin, which is your best performer today, up 8.7%, That's a different story. We're now breaking through highs, right? We ripped through those highs that we saw back here on December 14th. Now, all of a sudden, the question is, does 2100 or 21,000 become the most logical target? Obviously, whole number psychology will tell you 20,000 is probably your next stop. We're at 19,155 right now on the futures. So another 845 points. We are at 20,000. But I think you'll see it rally up and get this level up here. Yeah, that's a good one, Alan. I think there's a lag time between those two. You know, you're watching crude oil, rip today, and then you look at something like XLE. I go, wait a minute. This one's actually been stronger than crude oil. So it's still fairly correlated, but I think there's a lag time. Even though prices jump one day, doesn't mean all of a sudden your energy producers like Chevron and ExxonMobil are going to respond directly to that instantly. I think there's still a little bit of a lag time. That's the only thing I was looking at. I haven't looked at natural gas. Yeah, energy was, crypto led the way today, but that's not really a market segment, is it? Crude oil was a big one, and XLE was a 2% gain today, I think, on XLE, so that was awesome. Russell was up 1.65. Look at that move. Yay. Should have bought the IWM instead of the QQQs. Huge move up, but again, where are we coming into? You're coming right in this overhead supply, right around 1900. And again, if those financial numbers don't come out great tomorrow or market doesn't react to them in the positive way, you could see this thing start to sell off. Now, that said, let's real quickly talk about what happened out there in CPI numbers. The expectations were we're going to see a contraction, meaning inflation month over month declining. That's a really positive sign from an economic data perspective. And I think that going forward, you'll have more talk track about that. And I'm just about to get to the piece that I told you I totally screwed up on, I messed up on, and I will show you. Let me get that all set up for you guys here so I can rub my nose in my own mistakes. I'm going up there. Okay. So we came out at negative 0.1. The good news here, expectations were that we're going to go from 7.1% on consumer price index to 6.5. That's a pretty substantial drop year over year. We came right in line with expectations, which is great. That's a sign that things are slowing down. Obviously, the Fed's looking for 2.5%. We still got a ways to go, but we're nowhere near the 10% we were at just a couple months back. So this is really positive, and what we're seeing is a shift. Now, let me get rid of that, close out this one, accept all cookies. That brings us to this chart. Now, here is the egregious mistake that I made yesterday. For some reason, I said that we're pricing in a 50 basis point increase. That's not true. It's pricing in a 25 basis point increase. It's already dropped. And if we look here, you can see going back a month ago. So let's go back to December 12th. There was a 13.9% chance they were going to have a 75 basis point increase, a 51% chance of a 50 basis point increase, and a 35% chance of a 25 basis point increase, because we're at 450 right now. Notice where we are today. 1 month later, there's no chance of 75. There's a 6.8% chance of a 50 and a 93% chance of a 25 basis point increase. So I think what you're going to see going forward is the expectations, at least for the next 3 meetings, to be my opinion, are going to be 25 basis point increases in the Fed funds futures rate. We can go and look here in a second, but that was a mistake I made. I said 50. It actually is 25. That's what we're going to probably see happen on February 1st. Seems pretty solid, especially if that data keeps coming out like it is. Now, let's look at the end of the year. So the February meeting is the first one for the year. There's 8 years, so 1, 2, 3, 4, 5, 6, 7, 8. Going to December 13th of 2023, we can now look and see what's the probability there, right? We're currently at 450. The expectations are that we're going to be right where we are today. So this is pricing in pivots. This is pricing in actually rate cuts near the end of the year. I know a lot of people are expecting Q1 to be a rather bearish time. I'm actually changing my tune. I am more in the bullish category for Q1. I think we're going to go flat near the tail end and maybe slightly down near the tail end of the year. This is kind of a big knee-jerk reaction that we're seeing with these Fed funds. But ultimately, the markets will do whatever it has to do. So right now, 93% chance we're going to get 25 basis point increase at February 1st FOMC meeting. All right, let's see. What other questions did I have? So, as I mentioned, when I was getting my phone service done, and I was switching over from Verizon to AT&T, and I used to have AT&T and I hated it. Now I'm back to AT&T and so much better than Verizon where I'm at. Man, I can't believe I didn't switch sooner. Anyway, The young guy that was there helped me out with the phone. I told you he was like bringing up his phone and showing me all these influencers that he follows. And I'm like, one of the guys was just this idiot talking about, oh, the big short squeeze that's coming on AMC. And I was like, okay, stop. Short squeezes are still very popular. I think everyone's looking for that, the grand slam home run. From my perspective, if you want to be a trader of longevity and you want to do this for the rest of your life, then don't look at AMC. Don't look at GameStop. Don't look at Bonk token. Don't look at shitcoins. Find things of value or that have fairly predictable trends that you can be consistent with. So the question came through from TC. He says, seems like a short squeeze game with Carvana and Bed Bath & Beyond, both heavy volume and crazy upside for such weak stocks. What's your opinion of these, Merlin? Seems like the start of another GME. Yeah. Oh gosh, this is going to drive me crazy until I get it all fixed for you guys. Let's just look at GME just to start there. Ooh, GameStop having a huge rally. Was it $15? It hit $20 today. Woo-wee! Gotta love a 30% gain. It's still GameStop going bankrupt at some point. Let's look at AMC. Same thing, right? Now you mentioned Carvana. Look, we talked about Carvana on here, and my guess is Carvana will probably be bought by somebody else. So, have you had a huge run up? Yeah, it's been phenomenal. I mean, we were sitting at this thing at $3 a few days ago, and now it's at $8. Awesome, right? Great for you. Unfortunate part is it's tremendous risk. It's tremendous risk to be buying into these things because Carvana could very easily have gone into bankruptcy. Now, I haven't looked at the news. I don't know what that was. Was it earnings driven? Heavily shorted EV start. Oh, so it's just the short squeeze on it. Yeah, big deal. Oh, thank you. Thank you, Glenn and Katut. My bad. I forgot. But here is Carvana. I do it all the time. I'm so wrapped up staring at the chart. I'll get there. It's a 30-second delay, guys. It'll pop over in just a second. So there's your Carvana. I'll bring up the AMC again because you weren't looking at that when I was. But, this is the same thing. AMC, I think will stick around. I think, again, movie theaters are going to be there. They're just going to have to modify their business model a little bit. AMC, fine. I actually be okay owning AMC long term. I mean long term. GME, if any one of you said, hey, Merlin, I'll give you $100 to invest, and I'll double it if you invested in GME, I would save you money by saying, I'm not going to invest it in GME. Right? I just personally think this company is going to go bankrupt in a few years. There's just no use for it at all. Anyway, that one is a pump and dump. That short squeeze is over with. But you do have Carvana, which rightfully so is going to have a short squeeze pop at some point because so many people have been short this one. But here's where I have to put on my, my jerk hat, my condescending a-hole hat and say, listen, if you think that this little pop here, and this is what the Wall Street Bets guys are saying, is that this pop is a short squeeze and it's sticking it to the man, it's really hurting, Citadel Derivatives or whoever is shorting the heck out of it. Trust me, if they were short at $4, they're doubling and quadrupling up at $8. So spike it up to 20, spike it up to 40. They're going to short even more and make even more money, and you will be left holding the bag as the individual investor who got caught up in it. So TC, I don't touch it. Bed Bath & Beyond? Look, I've mentioned many times, this thing's going the way of the dodo. I can go into any Bed Bath & Beyond, pull up my app on my phone, scan the QR code on Amazon, and buy the exact same item at 20% less delivered to my house tomorrow. And I don't have to deal with the people inside that store. So that is pretty much it for me. I don't buy this stuff. I leave it alone. To me, this is absolute gambling. And in my younger days, I would absolutely jump on this, right? I'd be day trading and as quickly as I could. I'd be buying all that stuff. I don't care anymore. I don't care. It's fun. It's exciting to watch, but I would rather consistently get base hits and just get on first, and maybe get to second or third. Hell, maybe in the park home run. But these are live by the sword, die by the sword things. If you look at somebody like Jose Canseco, who I had the wonderful memory of him threatening to assault me as a 14-year-old boy in a parking lot. Jose Canseco, monster home run hitter, huge home runs, so exciting when he finally hits one. But he also struck out more than anybody else. And that doesn't help your team if they hit a home run every now and again, but they're striking out all the time. If I could have my entire team and not one person there is a home run hitter, but they're all great get on base, doubles, singles, all day long, I'll beat any team that has home run hitters, anytime. Is another I-bond still a good idea for 2023? Got some in August. Can I buy another in January? Yeah, you can get $10,000 per year, but remember those yields on those I-bonds are going to start to drop. we were 9 point something. Now it's 6.8, I think, is what the new current run is. And it's probably going to drop even more. So yeah, right, OG. I'm a small guy, but when I was 14, I was probably 80 pounds. I was a skinny little kid. I was asking him for his autograph at a parking lot at the Oakland A's Boston Red Sox championship game many moons ago. And he was walking to his car and I was like, hey, can I get your autograph? And he's like, no. And I'm a smartass. You guys all know that. So, he stops. I keep walking towards him and I'm like, come on, man. It's just an autograph. I had his baseball card. I go, I'm a huge fan. He goes, I don't care. He goes, if I sign that card, you'll just sell it and, you make money off it. And I go, so? I'm a kid. You wouldn't be a baseball player if it wasn't for people like me. We're the ones who pay your salary by going to your games. And he's like, I should knock you out. And there was this couple standing over there in the corner. And, he just stares at me and I'm like shaking a little bit. And I'm thinking like, well, do it. Because I got 2 witnesses. So lay me out, break my jaw, chip a tooth or something because I would sue you for every penny. Anyway, that was long time ago. Do we have a lot of baseball fans here? I have another story that same night that you guys might find very interesting. If you are baseball fans, you want me to tell it, just tell us the story. If not, I will move on to something else because we are almost out of time. Okay. Yeah, there you go. Big Eb knows all the number. 9-6. Now I thought it was 6-8. So we're 6-9. Resets again in May, and we'll probably be in the 5s at the next reset. I mean, we'll find out as we get closer to it, but you're still doing great by holding those. I don't know if I'll buy any more right now. We'll have to wait and see. Go Giants. That's right. Do you want to tell the story? Okay, so I was at that same game. It was the Boston Red Sox versus the Oakland A's, and we were at the team hotel. So we're walking through the parking lot, and we were inside the hotel. Again, I'm a tiny little kid. It was me, my buddy Brian, and his brother Michael. And his brother Michael, I don't know if it was Down syndrome or on the spectrum, but he is mentally challenged and sweetheart of a kid. So we're walking through, and at this point I was more of a Red Sox fan. I used to have a Boston Red Sox hat and jacket. They used to call me Mr. B in high school. And I look over, I'm like, Wade Boggs. Oh my God. Oh, one of the best baseball hitters of all time. I turn to my buddy Brian, and we all run over there. And I hand my card to Wade Boggs, and he signs it. And Michael, who's my friend's brother, who has, I'm going to say Down syndrome, he has a Sharpie in his hand, and he just goes, say this! And he shoves it into Wade Boggs' Hawaiian shirt. He's got this beautiful-looking Hawaiian shirt on, and there's a Sharpie mark all over his shirt. His shirt's screwed. It's trash. And my eyes are the size of saucers, like, oh my, I cannot believe that you just did that, Michael. And Wade Boggs turns, and he looks at me, but I didn't have the pen. Michael had it. And he looks right at Michael's face, and Wade Boggs had anger on his face. He was pissed off that his shirt's now ruined, right? This guy is such a gentleman. He looks over and sees that Michael is mentally challenged, and he instantly unbuttons his shirt, asks him what his name is, takes the pen, signs his name on the shirt. He had an undershirt on, signs his shirt, and hands it to Michael. That is a good baseball player. That's a good story. I hope that Michael still has that shirt. That was a pretty fun time going through the hotel trying to get autographs of all your baseball heroes. Anyway, there you go. My 1 story done for the day. 2 stories done for the day. Let's see. I went through that one. I'll get a couple more of these tomorrow. And since we're out of time, I'm going to really just wrap up here because I realized that I did start late, but it's also we're getting towards an hour show, and I told myself, no more hour shows. Here's your economic calendar for tomorrow. This is not the big stuff. This is just something that's happening. You notice down near the bottom, you have import prices and University of Michigan consumer sentiment happening. Not really that big of a deal. And you can see even for the UK, there's not really important stuff. So it's kind of a light day. However, this is where you get the big stuff. This is tomorrow's earnings announcements. Notice it's all BMO, before market open. Bank of America, JP Morgan, United Health Group, Citigroup, Delta Airlines, Wells Fargo, BlackRock, Bank of New York Mellon, First Republic, and there are dozens more smaller banks coming out later on, that day. It could be a huge day for markets tomorrow. Now, real quickly, let's just go and look at some of those names and see what they look like today. Maybe there's a little bit of leakage of news. All right, so Bank of America, there's your daily. What I'm going to do is I'm going to bring this up on a 15-minute and see if we have an anomaly spike. Oh, look at that. Bank of America was closing down, and it's already jumped back up and erased almost all of its losses in the after-hours session. That's a really positive sign. So let me get rid of extended hours trading. We'll go to regular hours, and I want to add volume on the bottom. So there's nothing that's abnormal here. You guys can see that you have the real big spikes of volume right as the market closes. So nothing out of the ordinary there at Bank of America. How about JPM? JP Morgan sold off near the end. It's up. No, it's down a little bit in the after hours. But notice the volume on it. Okay, this tells me something. This volume is the highest that we've seen here for... Actually, it's the highest spike of volume going all the way back to December 21st. Huge spike of volume right near the end. Now, what does that mean? I don't know, but most likely there's some information being leaked out there because I don't trust these statements. Citigroup? Meh. No, nothing. I don't see anything that's really that telling. WFC? Let's go to Wells Fargo. Ooh, ugly close there at the end for Wells Fargo. It was actually looking pretty good, and then just bam. Anyway, cool. I guess that's going to wrap things up, but be careful tomorrow. Obviously, there's nothing you can do about it now if you have open positions, but it will be a wild ride in that after hour, or right as that market opens up. Could be a crazy one. So for those of you who are, early morning risers, probably best to wait 10 to 15 minutes after the market opens and let some of that dust settle. If you jump in before that, you're probably gambling, throwing a dart, because you just don't know how these ones are going to report. I have a gut feeling that they're going to be reporting better than expected, but that it's just a gut feeling. I could be totally wrong. No gap fill. You mean, well, we'll see tomorrow. But as far as this Wells Fargo one, no, they didn't fill their gap. They got really close to filling that gap today, but didn't quite get there. All right, everybody, that's going to do it. Tomorrow's Friday's show. We talked earlier in the week. I think I had Don Fron on Monday, said he was going to come on the show tomorrow. So maybe we can discuss some things with Mr. Don Fron from the Don Fron Show. If you guys have any questions you want me to ask Don, put them down below any of the YouTube videos. Just go out there and type in your comments or questions. I will get to those, incorporate them into the slides. I'll have a nice glass of whiskey all ready for tomorrow's show. That said, thank you guys so much. Hope you have a fantastic remainder of your day. Hit the thumbs up. Share the show if you like it. I'll see you guys tomorrow. Take care.